ICT himself said you can quit your job in 90 days from this one strategy alone. It's a slightly newer model, however it's very, very misunderstood because a lot of people on YouTube are teaching it wrong, but in this video I'm going to show you how to trade it the right way. No daily bias is required, all you're doing is catching one simple move that repeats over and over again, but in that one simple move I'm going to show you a secret refinement that nobody is talking about. It's very simple yet very misunderstood that absolutely maximizes the risk to reward and win rate for this strategy. So let's get into the video. Before we get started, we passed a $100,000 challenge for a client in just 4 minutes. In 4 minutes, this client was funded $100,000 in live trading capital. We have the fastest passes in history. Nobody is passing challenges faster than us. Some people take months and even years before they reach their first funded account, but with us, you can get funded in a matter of minutes, just like this person did right here. So if you're watching this and you're not funded yet, you only have yourself to blame because this is a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed a challenge, so you will be funded 100% guaranteed. And it's the smartest business decision you will ever make if you take this opportunity. You've got to treat trading as a business to be successful. This is the smartest business decision you'll ever make. This has zero risk but unlimited reward. With this funded account that you get with us, you will have unlimited reward. You have unlimited potential. You can make as much profit as you want. And that client can now trade on that funded account and make real profits, live profits. And they also get free 1 month access to the signals room, which has been reduced from $100 a month to just $30 a month if you want to get the signals by itself. I've reduced it so much because I want to make it as affordable as I can for you guys, but I only want serious people in there. So it's going to be around for a limited time only. So make sure you get in whilst you still can if you want the signals by itself. However, if you want the signals for free and get a funded account guaranteed, a zero risk investment, so if you want to get funded guaranteed and get free 1 month access to the signals, the link to this will also be in the description below to get started and take action. So let's get straight into the strategy. First of all, we want to delineate our time windows. So our main time window is going to be from 9:50 a.m. to 11 a.m. New York time. So 1 hour, 10 minutes. It's not long at all. I've got the New York time over here. I've got the London time over here. So 2:50 p.m. to 4 p.m. London time, 9:50 a.m. to 11 a.m. New York time. Okay. So there's two parts to this time window that we're going to be trading. Okay. So from 9:50 to 9:55 New York time, or 2:50 to 2:55 London time, we're going to mark out our liquidity points. We mark out our most recent high or low on the 5-minute time frame. And by the way, there's only two time frames we're going to be using: the 5 minute, 1 minute. It's a very, very easy strategy, but it's very misunderstood and a lot of people are trading it wrong. Okay, so the first step is we're going to mark out our liquidity from 9:50 to 9:55. We're going to let price make liquidity. We're going to mark out our most recent liquidity points, buy side and sell side, highs and lows. Remember, no daily bias, no high time frame bias, although it adds more confidence to it, so I would recommend it. However, you don't have to have a daily bias. Okay. Then our second phase in this time window, look for our entry. So from 10 a.m. to 11 a.m. ideally New York time, we want to ideally be entering our trades. 3 p.m. to 4 p.m. London time, same thing. We want to be looking for our entries in this 1 hour time window, and in this time window over here, we're going to look for our liquidity points and we're going to wait for them to be raided on either side. So our steps to follow is: first step, mark out our most recent high low on the 5 minute. Step 2, wait for the liquidity purge on either side on the 5 minute time frame. And then the third step, on the 1 minute time frame, we're going to wait for our confirmed entry protocol on the 1 minute, which I'll get into here. And I'm also going to share my secret refinement and the two variations to this strategy. So as you can see over here, let's start off with this example. As you can see, I've marked out my session open time over here with this red line right here. And all we're going to do is we're going to be on the 5 minute time frame at this point, marking out our most recent highs and lows to the left of price, directly to the left. We're not going to go marking out liquidity from years ago just because there's an old low there, for example. We're going to mark out our most recent price action, our most recent liquidity points on the left of price. So as you can see, there was an unmitigated high over here, unmitigated low over here. So these are major liquidity points. And to add confluence to this, we want to look for taps into any sort of PD raise. However, it doesn't have to, which is why I've not added it over here. That's the second variation. Sometimes it may tap into a PD raise, such as a fair value gap order block. However, it doesn't have to. But the main point is that it sweeps liquidity and then we look for the reversal in the opposite direction if we get the confirmation. So over here, we're on the 5 minute time frame and we've marked out our highs and lows on the left of price, the most recent areas on the left of price. All we wait for next is a 5 minute to sweep in either direction. So in this example, it swept the highs first, we let the 5 minute close, and then we go down to the 1 minute time frame. And as you can see on the 1 minute time frame, you see some structure like this, but let's break this down. As you can see, 1 minute is making structure to the upside before sweeping liquidity. So it swept liquidity, making structure, high, low, high, high. And then as you can see, price breaks the structure. However, we don't just want to see a wick break of structure. I explained this on my last video. we want to see a big energetic move to the downside that is with displacement. Displacement is the key word over here, guys. We want to see a body closure below, and we want to see it break with energy after sweeping liquidity. And if it sweeps extra liquidity on the 1 minute, that's even more added confidence, because that is more confidence for price to go in the opposite direction now. Okay, so as you can see, price swept buy side, took the lows out over here with displacement, and all we do now, mark out the mean threshold of the order block itself. So let's say you have a bullish order block over here. All you want to do is mark out 50% of the bodies and then take your entry based off that, and this maximizes the risk to reward in this setup. A lot of people just take the trades just off the full order block, however the risk reward there is lower, and if you want to maximize the risk reward, you can take trades from the mean threshold of the order block, place your stop loss above the high of the order block, and then obviously target opposing liquidity. So in this case, we would be targeting the most recent low that we marked out on the 5 minute at our session open. And then over here, the second variation, as you can see, price didn't tap into a PD array such as an order block or fair value gap on the left. Instead, price just swept liquidity to the upside, we waited for our confirmation, took the trade to the downside, and as you can see, swept liquidity, broke structure with displacement, so the body's closed below as well, with an energetic move. You could mark out the order block and take the entry just based off the order block itself, or you could mark out the mean threshold of the order block and then get a high risk to reward entry. Let's get into some live market examples. So as you can see, I've marked out my time window over here. However, I'm going to get rid of this vertical line because the session indicator will come up. Okay, so as you can see now, where is our most recent liquidity point, buy side and sell side? Remember, there's no bias over here. We're going to look for both sides of liquidity to be taken out. Okay, we can't have a bias saying, okay, just buy side is going to be taken out or just sell side is going to be taken out, because we've not got the high time frame bias. However, I would recommend looking at my daily bias video, because that adds confidence to any strategy. Okay, so all we want to do is wait for a sweep in liquidity in either direction. We want to wait for that purge on liquidity in either direction. So let the 5 minute close as well after it sweeps liquidity. So okay, it's made equal highs over here, so price is more likely to sweep the highs, right? Because there's more liquidity when there's equal highs. So now that the 5 minutes close, we're going to drop down to the 1 minute time frame. It's very simple. All we're going to wait for is that 1 minute confirmation. So where's our market structure shift area? As you can see, price made a fractal low over here. So we're going to wait for this to be broken with displacement, or if price doesn't break this low right here, price may sweep liquidity and then we'll find a new low to be taken out. We just see what price does. So as you can see, price took more liquidity. This is going to remain as our market structure shift low that we're looking to get broken. And as you can see, the body's closed below price over here. And let's see one more candle. As you can see, price left displacement with this break. It left a fair value gap as price broke structure, and the body's closed below. You got two bodies closing below. This is a market structure shift with displacement. You can see the energy behind this move. Look at all these candles to the downside, looking to break this structure. Okay, so now all we want to do is mark out our order block in this case. So this extreme order block right here, and all we want to do is mark out our mean threshold of this order block. And as you can see, this is our entry at the 50% of the order block. Place our stop loss above the high. You don't want to be too greedy and put your stop loss over here, although yes, the risk to reward will be improved majorly, but you're more likely to be stopped out. So you want to put your stop loss above the high over here. So where do we target? We found our entry at the 50% of the mean threshold of the order block, and we've found our stop loss above the high in this case. So we're selling. If we're selling, it's going to be above the high. If we're buying, it's going to be below the low. So now where do we put our take profit? As you can see, we have this main 5 minute low that we marked out prior to this break of structure actually happening, this market structure shift. So we could find further take profit levels. As you can see, we have this major imbalance. This is going to be our major draw on liquidity, and you could target this, for example, order block right here, or the end of this imbalance. We're going to go back up to the 5 minutes to actually look for another take profit. Okay, so we let price play out. As you can see, price taps into our area nicely, and if you were to put your stop loss just above the bodies of this order block, you would have been stopped out. So that's why I recommend putting the stop loss above the high of the order block, above the high of the displacement leg overall. And then as you can see, price smashes our take profit, our first take profit, but over a 1 to 3. And if you look at the 5 minute time frame now to target your second take profit, you can see we have clean imbalances, clean fair value gaps over here. So you could target this order block just after these imbalances are filled, maybe at the high of it or at the body, whichever one works for you. However, to be safer, we're going to mark out the body of this order block, the high of this order block for our main take profit area. Okay, and this would give you exactly a 1 to 8. So if you're trading your funded challenge and risking 1% on this trade, you could pass your challenge in just this one trade alone. And as you can see, our take profit is smashed for a 1 to 8. let's get into the second example. Okay, so let's get into the second example, and remember, we're not going to overcomplicate it. We're not going to add things to make it look more advanced than it is. We want to keep it as simple as possible. We want to keep our charts as clean as possible. What we want to do is just mark out our most recent high and our most recent low prior to our time window. So as you can see, session opened over here. So we're going to mark out this liquidity low right here. So the sell side resting below this low, sell side liquidity, and buy side above this old high right here. So all we're going to do is mark out our buy side and our sell side liquidity, and we're going to wait for a purge on liquidity on either side. So if price takes out the high, we're going to be looking for reasons to take the trade in the opposite direction. If price takes out the low, we're going to be looking for that confirmation on the 1 minute to take trades in the opposite direction. Again, we're going to keep it simple and make it easy to understand. So wait for the 5 minutes to sweep liquidity and close. Okay, that's the key word. So as you can see, price swept liquidity over here. So now we're going to drop down to the 1 minute time frame. And as you can see over here, price made this fractal low with this candle's low over here. So we're going to wait for that to be broken with displacement, break of structure, market structure shift, essentially all the same thing. So we just let price play out. And as you can see, price broke the structure with a massive body. Look at the size of this candle over here. That tells me that smart money was involved in this move. Price did sweep liquidity, and now the market structure is shifting to the downside. This is shifting bearish. So now that we know that price is definitely bearish from here, now that we know that market structure has shifted to the downside over here, so after it's taking liquidity and now it's reversing in the opposite direction, what we're going to do is we're going to mark out our main order block with a bigger body. Okay, that's the key word over here. So you could mark out both of these candles right here. However, a mistake a lot of people make is call the last up candle before the down move the order block, and that's not essentially the case. The main order block has a bigger body, so we're going to mark out the mean threshold of the main order block for this example. Okay, so when it's in this scenario, you're better off marking out 50% of the main body order block. You're more likely to get tagged into the trade in this scenario over here than if you were to just target just the order block or 50% of the order block, the extreme order block right here, the last up candle before the down move. Okay, so we're going to go for the safer option, but still try and maximize our risk to reward over here by placing our stop loss above the high and at the 50%, the mean threshold of the order block. We're also going to target the opposing liquidity. As you can see, this is our main take profit over here for just over a 1 to 2, and our main take profit overall for just over a 1 to 5. Okay, and as you can see, we've got loads of sell side lows, sell stops and sell side liquidity resting below these lows, equal lows over here, the relatively equal lows. You got old lows. This is going to be our main liquidity, our main draw on liquidity. So that's essentially all you need to know for this strategy. Our main draw on liquidity after our entry. So as you can see, we got tagged into the trade right there, and price is tanking towards our level. As you can see, price taps into our TP area for just over a 1 to 5. If you were to risk 1% on that trade, that would be 5% made on just one trade alone. You're almost halfway to passing your funded challenge if you are taking the funded challenge yourself. However, remember, you're better off using our automated trading bot to pass the funded challenge for you, and it's a 100% guarantee. It's a zero risk investment, the smartest business decision you will ever make. Remember, if you treat trading as a business, watch everything change. It's a zero risk investment. This has got zero risk but unlimited reward. The potential is unlimited. You can make as much as you want on that funded account. And remember, for the signals room itself, the signals by itself are just $30 a month. I've reduced it from $100 a month to just $30 a month because I want to make it as affordable as I can for everybody. Remember, you'll get free 1 month access to the signals room if you use our automated trading bot to pass the challenge for you and get you on the live funded stage, guaranteed. So you guys can learn how to take trades on the live funded account, on the live funded stage. From our live trading signals room, you guys can learn how to take trades on the live funded accounts and make real profits, make consistent profits and consistent withdrawals. And people are changing their lives from just one funded account. So don't take it for granted. Take advantage of it whilst it's still available. It won't be around forever. So make sure you get in whilst you still can and get funded whilst you still can. A lot of people are taking months, even years before they get the first funded account. So if you want to pass it in a matter of minutes, click the link in the description below and get funded guaranteed. It's a zero risk investment. Remember, you'll be funded guaranteed. You get also free 1 month access to the signals room, which is just $30 a month right now. So that's it for today's video, guys. Remember, stick to the rules and make sure you're taking trades within our time window. So remember, the trade was taken at 10:08 a.m. New York time. I've got my time set to New York time. So remember, if you follow the rules and follow the protocol, you will be profitable overall. I've back tested this, forward tested this, I've even live tested this myself, and I can tell you guys it works wonders. ICT himself said you can quit your job in just 90 days if you stick to this one strategy, this one system alone. Share this video with a friend who's struggling to find a consistent strategy, a consistent setup, and if you're not funded, remember, click the link in the description and get funded guaranteed. And also, if you want the signals, it's $30 a month. I've reduced it already to just $30 a month to make it as affordable as I can for everyone. If you want to get funded guaranteed, you get free one with access to the signals room to learn how to take trades on the live funded account once we pass your challenge and get you on the live funded stage. It's a zero risk investment. I don't know what you're waiting for. If you haven't joined already, if you're not funded already, I don't know what you're waiting for. Don't make excuses. Take action now, guys. That's all for today's video. I'll see you in the next one. Peace.